Mortgage Patriot Nation Unite. Probably the biggest question that always people have when they're trying to buy a home, next to what's my payment going to be, is, hey, how much am I going to write a check for? How much am I going to be wiring money out or getting cashier's check for? Tell me the exact amount, and how do I figure all this out? So today we're going to do a deep dive into closing costs, how they're derived, what's the composition of them, and more importantly, maybe the most important, is how do we reduce that as low as possible. That's where I really shine. So I'm going to show you examples as always. Watch it all the way through because you're going to learn something very important. And if that's of interest to you, let's kick off this rodeo right now. Hi, folks. I'm Kevin Fagan. I'm the Mortgage Patriot on your side, nestled here in the Hill Country above San Antonio, Texas, serving all you proud Texans and all you great folks all around the country. So another great one as always, because there's normally two big questions that people have as they identify a home, and that is, how much is this going to cost me on a monthly basis? Principal and interest, taxes and interest, the whole thing. How much is it going to cost? And number two, which we're going to cover today, is what are my closing costs? What's the actual check I'm going to write, or approximately, if not exactly? I need to know. And why does it take so long, and all these other questions that they have. So we're going to explore that and get into the nuances of closing costs and how they're comprised. So stick all the way through. Let's get into that content right away. As I get into all these costs, let me first answer that question of why does it take so long to close on a home? Normally about 30 days or so. And the answer is because there's so many darn professionals involved. And it could change a little bit, depending on what type of loan it is, but normally it's going to take about 30 days. And I'm going to outline all the different professionals involved. I may miss a few even, believe it or not. You have an inspector, which of course inspects the property for if anything's wrong or anything is not to code and so forth. Number two, you've got an appraiser that's appraising the property. You have surveyors, which survey the lot and give a report based on that. You have homeowners associated professionals that are telling you what the costs are per month and what the neighborhood regulations are. You've got insurance agents, which of course provide the binder and the coverage for the home. You've got title professionals, escrow agents, which give you title insurance and do all the closing efforts. And of course you have the lender themselves, which has an underwriter who's underwriting the whole transaction. And you have a processor who acts as a liaison between yourself, the buyer, and the lender and the loan officers. And you'll be working closely with the loan officer and the processor. And lastly, the loan officer, like myself, who's basically project managing the whole event. So you've got all those different professionals involved, and it takes every bit of sometimes 30 days to get a deal done. I've seen deals that I can get sometimes done within about 21 days, but typically it's going to be closer to 30 days. So with that in mind, let's now dig down into the closing cost scenarios. I always think the best way to talk about closing costs and cash to close is to describe what I call the three buckets of closing costs. Bucket number one is down payment bucket. Bucket number two is the actual closing cost bucket. And number three are your prepaids and escrow accounts bucket. All three of those buckets are costs that the buyer incurs. And so your cash to close figure, the actual check you're going to write at closing, is a sum of all those three buckets. Hopefully that makes sense. Some people are confused because they'll say if they have a VA loan, for example, or a USDA loan that has no down payment, it's a 100% loan, they think they have no closing cost. Well, that's just bucket number one. Bucket number two is your closing cost, and that is the itemization of all those professionals that I talked about earlier. The inspector, the appraiser, the surveyor, the title people, the HOA people, the insurance agent, the loan officer, the underwriter, the processor, and you have government fees on top of that. Those are the closing costs. That's bucket number two. And lastly, bucket number three, those are escrows and prepayments. What are those? You have to prepay insurance 12 months and prepaid interest for however many days you close before the end of the month. And then you have escrow. The escrow account is typically about 2 to 3 months more of insurance and about 3 or 4 months of property taxes. That's bucket number three. So now let's concentrate on bucket number two, the closing costs. I want to say this up front as we get into all these numbers is that I've been doing this for a little over 20 years. And 20 years ago, there were bad experiences at the closing table, which caused quite a bit of regulation to take place. And now it's hard for an unscrupulous loan officer to take advantage of people, just so you know. It still happens, unfortunately, and there's still fees that are inserted. But most of the time, hopefully most loan officers are getting you a fair shake. And certainly someone like the Mortgage Patriot, yours truly, is going to catch you the best deal they possibly can. You're going to see numbers at the very beginning of a loan transaction. And when you start a loan transaction, within 3 days, you're going to get what's called a loan estimate. You can see what that looks like kind of right here. It's about a 2-page form. It's going to show, the first page is going to show the loan amount, roughly what your loan monthly payment's going to look like, roughly what your costs are, what your cash to close is going to look like, the check you're going to write. Page 2 is the itemization of all those costs, all those professionals we talked about, right? So page 2 is where all the nuance of numbers come from. We're going to show you an example in the state of Texas, about a $300,000 house, what closing costs are going to look like. Now, what you're about to look at is an example of a loan estimate on a $300,000 house in the state of Texas. And as we pop it up on the screen here, notice box A, box B, box C, and box E represent all your closing costs. That's bucket number 2, if you recall. Bucket number 3 is your escrows and prepays. Those are in boxes on this report, box F and G. So total cost, bucket number 2, right, in our example, is about $6,500. It's about $6,458, but let's round it up to $6,500. So you can expect just transaction cost to be about $6,500 on about a $300,000 purchase in the state of Texas. And your bucket number 3, your prepays and your escrows, is another about $4,400. So all told, you'll see the total there is a little over $10,000 of a cash to close. That does not include bucket number 1, which is the down payment. Down payment on an FHA loan on a $300,000 house is $10,500. So the entire cash to close, the check you would write at closing without any help on a $300,000 house in the state of Texas anyway, it's going to be about $21,000. Pretty good chunk of change. So let's get into the most important part of how do you reduce all this? How do we get that down by using certain techniques or ninja tricks, as we like to say. As I get into this last section here, reference this video. It's kind of a companion video. It's my most popular one, how to buy a $300,000 house with just writing a check for $1,000, where I kind of go over all these strategies in detail, what I'm about to present right now. So there's really 3 ways to lower your cash to close, those costs that we identified on the loan estimate that you saw a minute ago. And that's lender credits, seller concessions, and down payment assistance. So if you can get some form of 2 or 3 out of these things, then you're going to greatly reduce the amount to close. On a $300,000 house, we said that would be about $21,000. You definitely want help. So lender credits, what are those? That's a credit that a lender is going to give to you if you accept a certain interest rate. So for example, let's say the prevailing interest rate across the marketplace is 6%. And the lender says, hey, I'll give you 6% all day long, but if you want 6.25%, a higher rate, why would you want that? It's because the lender will then give you back, let's say $2,000 at closing to reduce your closing costs. Some people like that balance. They say, well, I'll take a slightly higher rate so that I can pay less at closing. That's a lender credit. Number 2 is you have seller concessions. Seller concessions are enormous. You're allowed up to 6%, believe it or not, of seller concessions in an FHA loan. What does that mean? Well, on a $300,000 house, 6% is $18,000. You could potentially write a check for just $21,000 minus $18,000 of seller concessions and pay only $3,000 net. Why would a seller do that? Because, well, they probably won't, but they want to give you some concessions just so you can help get a deal done. I get concessions all the time. It usually comes about 3 or 4% of the purchase price. So I can get that $21,000 way down just with seller concessions alone. And then lastly, of course, down payment assistance. Down payment assistance comes in various forms. Again, look at this video right here where I talk about the best down payment assistance programs available right now. There's thousands of them. They all depend on federal programs, state programs, county programs, city programs. So there's way too many to discuss, but just watch that video and there's going to be something available too. You just know that the question is, how much is that down payment assistance going to be? Because there's going to be different forms. So the bottom line is on a $300,000 house where you normally have to write a $21,000 check for your all 3 buckets, your down payment, your closing costs, and your prepays and escrows, I can get that figure way down to sometimes as low as $1,000, but usually you're going to be probably below $10,000. So you'll be happy with the result. Please call me at 210-317-6514. I'm the Mortgage Patriot on your side. Make it a great one.